stocks ended higher Wednesday after Senate Minority Leader Mitch McConnell offered the Democrats an olive branch when it comes to the debt ceiling. McConnell said his party would support an extension of the federal debt ceiling into December. That effectively pushes America back from the brink of possibly defaulting on its debts for the first time in history, at least until the end of the year. Investors applauded that progress, leading to a turnaround in the stock market. The Dow gained 102 points, the S&P 500 17, the Nasdaq 68. Strong news also coming on the economy. Private employers hired 568,000 new employees in September, according to a monthly survey compiled by payroll processing company ADP. The biggest boost in hiring came largely from leisure and hospitality, with bars and restaurants adding staff amid signs the latest health crisis outbreak is starting to slow. The hiring number initially spooked Wall Street ahead of Friday's more comprehensive jobs report. George Schultz is founder of Schultz Asset Management.
With higher and higher employment, the likelihood that the Fed will keep buying $120 billion worth of securities per month, for an extended period of time is diminished. And I think the market's worried about that because, you see one good number or several good numbers and, the pressure at the Fed, must be becoming extreme.
Energy prices had a wild ride. Fear of a supply crunch as temperatures drop originally sent U.S. oil prices close to a 7-year high and natural gas prices near 12-year highs. But prices then reversed when Russian President Vladimir Putin said Russia was ready to help stabilize the market. Crude oil prices settled the day down $1.50 to more than $77 a barrel. In corporate news, Target announced a Buy Now, Pay Later program for the holiday shopping season through a partnership with Affirm Holdings. Shares of Target finished the day slightly lower, but Affirm surged roughly 20%. A big jump in hiring is fueling hopes the economy made a turn for the better in September. Private employers hired 568,000 new employees last month, according to a monthly survey released Wednesday by payroll processing company ADP. September's bigger-than-expected gain topped the average for the entire third quarter. There was a boost in hiring last month at bars and restaurants, and a sign that employers believe the latest health crisis outbreak is starting to slow. Leisure and hospitality led the hiring pack with 226,000 new jobs. Manufacturing and construction rounded out the top 3 hiring sectors. Though the ADP number isn't good at predicting the official jobs number released each month by the Labor Department, it is good at predicting the direction. Friday's complete jobs data are expected to show a drop in the unemployment rate to 5.1% and a rise in employment by 473,000. But there's a downside to the good news, at least on Wall Street. The economy is likely good enough to meet the Federal Reserve's criteria to begin tapering its extraordinary bond buying program. Those monthly purchases were instituted as a band-aid for the economy at the start of the health crisis. But with inflation way above the Fed's 2% comfort level and Fed Chairman Jerome Powell announcing last month that the economy was just one, quote, decent monthly employment report from meeting the Fed's jobs objective, investors are looking at Wednesday's ADP hiring report as a suggestion that the start of the tapering could start as soon as the Fed's November meeting.
Apple will be hit with an EU antitrust charge over its NFC chip technology. That's according to sources close to the matter. The move could see the tech giant hit with a big fine. It could also force Apple to open its mobile payment system to rivals. EU antitrust leader Margrethe Vestager launched an investigation into Apple Pay in June last year. The European Commission has focused mostly on Apple's NFC chip, which enables tap-and-go payments on iPhones. A source told Reuters the EU competition enforcer is preparing a charge sheet which could be sent to Apple next year. Documents like that usually set out practices seen as anti-competitive by the regulator. The Commission refused to comment when approached by Reuters. Apple has said that privacy and safety is the main reason for its policy around mobile payments.